All right, everyone. Good afternoon. Good afternoon. We are going to begin momentarily. Today is the fund update call. So we will be doing this, like I said, on a regular basis. Once a month, we're going to go over the portfolio, what it's doing, what it's not doing, and what we expect on a go-forward basis. And we'll have a different topic of discussion every single time. Today's topic is going to be why exactly do we hold Bitcoin in the portfolio? But I will cut to the chase here a little bit. And if you're not able to attend this live, you'll get an email once the call has been approved from compliance with a link to our YouTube channel to watch at your leisure. Okay, and feel free to pass it on to friends or family if you so desire. Let me just quickly share my screen and we can begin. Good afternoon, Matthew. I think you're on mute, Matthew.
Yeah, this threw myself off mute. Good afternoon. Good afternoon. So yes, today is about Bitcoin, and this is a fund update call, which is now once a month, right, Omar?
Yes, right. The last Wednesday of every month. So once
Yeah.
a month, that is the fund update call. And like I said, just to cut to the chase, I want you to remind you that 90% of fund managers over a long period of time do not beat the index, okay? They do not. We are beating the index this year by roughly 2.5%. So it's a big deal to be able to beat the index. Now, if you can do that for a sustained period of time, it becomes an awesome thing. So we are doing well versus the index. Net of fees, net of everything else, we are beating the index this year by about 2.5%. Now, last year was our first year where the fund was open, so it's not a great comparison because the majority of the gain came in the first half of the year and we didn't exist in any meaningful quantity at the first half of the year. Okay. But this year is a very good comparison of how we are doing. And like I said, we are up on the index a decent amount. So I'm quite happy about that. Matthew, anything to add there?
No, you know
You
what?
know how it is to beat the index?
It is a difficult it's a difficult task because it's very investing and managing money professionally is very, very different than doing it for your friends and family, right?
Yep.
Uh, so yeah, I would think that it is quite challenging, but we're very pleased to say that, we are beating the index right now and hope to continue this progress into the rest of the year.
Yeah, and please, guys, ask any questions if you have along the way. My apologies. Something happened there. Okay, let's begin the presentation. All right. Okay, so the key is why are we investing in Bitcoin? We know that companies go up or down long term based upon the money that company makes or doesn't make. Bitcoin is a bit different. It doesn't make money. It's like gold, sort of. Gold doesn't make money. So it becomes a quantity, a scarce quantity. It's not the same thing. We don't look at the earnings of Bitcoin every quarter and say, well, Bitcoin did this and Bitcoin did that. That's not how it works. Bitcoin, and I want you to think about Bitcoin as being the new digital gold. Okay, that's really what it boils down to. Okay, so what are we looking out for and how we do? So decentralized. Okay, meaning that there is no central bank that controls Bitcoin. Bitcoin is global and it is out of the hands of any central bank. Okay, so that's first thing. It's decentralized. That's a big thing. It's digital money that operates without a central authority like a central bank or a government. So let's say, for example, you're the US government and the US central bank. You just print more money. Great. Same thing with the Bank of Canada. Just print more money. That causes something called debasement, which we'll get into later on. Now, Bitcoin was launched in '09, and it's the first internet native monetary instrument. So, and like it's often referred to as digital gold. So just think about that, okay? It's built on a secure and transparent technology. Every transaction is recorded on a tamper-proof distributed public ledger called the blockchain, which I'm sure a lot of people have heard before. Now, here's the really interesting thing here. Only 21 million Bitcoin will ever exist. So unlike the central bank that can just print more money out of thin air, you can't just make more Bitcoin. 21 million is all that'll ever be made. Now, 19.6 million has already been mined. Okay. Now we're mining roughly at 450 Bitcoin per day. Now, these are the miners that actually mine Bitcoin. They add to the blockchain and they get, as a reward for doing that, they get their Bitcoin. Now we're down to 450 a day right now. And like I said, something like 19.6 million has already been mined. So there's not a lot left over. And every 4 years, it halves. So the next halving will be in 2028. And instead of being able to mine 450 Bitcoin, it'll go down to 225. Now, in contrast, this central banks can produce or debase currency whenever they want. So when you look at a property that your parents bought, say way back when they bought it for like, oh, I bought my house for like, 50 grand or something. You're like, wow, how is that even possible? Well, a lot of that has to do with debasement because of printing of additional money. Now, that's why real estate winds up being a pretty good hedge against inflation. But make no mistake about it. Governments around the world are going to continue to print money and debase their currencies. Now, a good example of that would be the U.S. the U.S. Debt. Excuse me. We are at $38 trillion. Okay, 38 trillion. The U.S. economy is about 30 trillion. So they are more in debt than the entire economy produces in a year. Think of that. Okay. Now, out of that 30 trillion, only about 5 trillion goes to the federal government, excuse me. You got to pay interest on that 38 trillion, okay? And let's call it 4%. I'm being kind as well, Matt, right? So you're almost at what, 1.6, 1.7 trillion dollars a year? You're only collecting 5. And as this number grows and grows and grows with the new big, beautiful bill that just came out, and that number gets higher and higher and higher, there's only a couple solutions. One solution is print more money. Okay. And I think that's the most likely. Solution number 2 would be labor productivity increasing substantially. And that may be the case. So as artificial intelligence and robotics collide and come together, in the next number of years, we may have a lot more economic output, which means your debt to GDP actually goes down because your GDP is increasing at such a fast pace. Now, that hasn't happened yet. It might be on the horizon, but we'll have to see. Right now, it's a bad position for banks around the world, central banks around the world, like the U.S. Bank to be in. It is a problem. The third solution is raise taxes, and that's political suicide. So you can't do that. So the only real solution in the near term is going to be what? Print more money. And since Bitcoin only has 21 million, vis-a-vis the US dollar, it's increased very rapidly in price. And as more and more money is printed, I would expect this to continue. Okay. Now look at peer-to-peer transactions. We recently had someone sign up for the Theta Trading course in Portugal. And Matthew, how did we receive that money? Bitcoin, right? And this is probably going to become a greater occurrence as we move along. You can buy things like you see it at certain restaurants now. This will probably get more and more commonplace in the near future, okay? 24/7, low cost international transfers, a major departure from centralized permissions of banking system. For example, you don't have to fill out, different, where did you get this money from? Why are you sending it if it's a large quantity? That type of stuff. So it allows people a lot more flexibility, okay? Now, financial inclusion, okay? Access to financial services for people without access to traditional banking. A lot of people around the world don't have access to banking. This is a great way. Matthew, you and I set up those Aura wallets. How hard was that to set up?
That was very easy.
Very easy. Yeah, and we have our Bitcoin stored on there. It's super easy to open. So if you have an email address, you can set yourself up with a Bitcoin wallet. You don't have to worry about the traditional, I go in there, set up a bank doesn't want me, then I got to pay the high fees every month. This could be an alternative. So there is more and more adoption. And remember, Bitcoin is not, it doesn't make money. So what is the main driver going to be of appreciation? It's going to be supply and demand and debasement of currency. Well, we know there's only so much supply. Demand is increasing every day. More and more governments, people are adopting this. And that's why you've seen the price of Bitcoin just kind of keep increasing and increasing. Okay, so let's take a look at some of the things that it's good for and not so good for. Fiat obviously would be the current system that we have. So Bitcoin is, sorry about that. Bitcoin is very portable. Okay. Oh. Sorry, Matt. Okay. So Bitcoin is very portable. It's not as durable because it's on, it's in thin air. Fungible. You can use it. Verifiable. The blockchain has every transaction. Divisible. Within every Bitcoin, there are 100 million sats or satoshis, and they're called satoshis because of Satoshi Nakamoto. He's the the so-called inventor. Nobody knows who he is though. And scarcity. Scarcity is another one. A plus for scarcity. Look at fiat for scarcity. F. Why? Because you can simply print more and more money. Look at portable. Gold is a D. So, for example, if you had a bunch of gold and you wanted to set up a new life somewhere, you had to leave or do something or transfer money over. You can't transfer over gold because it's a physical commodity. Also, more and more gold is made every year. It's not a limited resource. Okay. Now, the thing that Bitcoin doesn't have going for it, I would say, is established history. It's only been around since 2009, whereas gold has been around for, who knows when, since the start of time. And fiat currency has been around forever as well, thousands of years. So that's the only area it's really not as good in. However, we expect that to change as more and more people become aware of Bitcoin and understand the advantages of it and adopt it. And that is happening at a breakneck pace. So remember, I told you supply and demand. Every day, demand is increasing. Supply is constant at 450 Bitcoin a day. That's it. There's no more. And once those 21 million are gone, that's it. After that, then there's no more to be made. Now that 21 million, that'll still take some time. It's going to take actually over another 100 years. So we have a long ways to go before it happens. But as Bitcoin becomes more and more established, you're going to get more and more adoption, therefore more and more demand with a limited supply. Now look at what's happened in the last few years. You've had ETFs come out. You've had sovereign wealth funds start buying Bitcoin. You've had state and local governments buying Bitcoin, pension funds, as well as much more adoption on the retail side. People are using it. Like the transaction we just did in Portugal, right? That was the best way to do the transaction. And as this increases, what happens? Demand for Bitcoin goes up. And as demand for Bitcoin goes up, that should inevitably shoot the price higher. And that here, Matthew?
No, it's becoming, I was actually surprised when I first, first when I heard someone want to pay us in Bitcoin, I was like, okay, cool. And that was something that I was wanting to do, but never had the pressure to actually do until someone wanted to send us money in Bitcoin. It's like, okay, cool, let's do this. And I was actually very surprised at how easy it was to transact. And I can see the appeal there, but at the same token, I do think it's a little scary too, right? Because you could have all this money simply sitting on your cell phone.
Yeah.
And it's kind of weird there, but then, there's a case of, you could have a cold wallet as well. So yeah, there's that too, right?
Yeah, like that poor fellow in England who lost his hard drive where he had stored his Bitcoin. He has around $800 million worth of Bitcoin stored on some hard drive that he made when Bitcoin first came out. He just forgot about it, and it's worth 800 million now. Now, most people are going to be very careful of how their Bitcoin is stored. They're not just going to forget where they put it or something like that. But once a Bitcoin is lost, it's lost forever. Now it's estimated that the 21 million, 5 to 6 million are probably lost permanently. And that's a lot of the people who first adopted Bitcoin may have mined it and they forgot about it and now it's gone. So we're only playing with about 16 million, call it, and a lot of that's 1.5 hasn't been mined yet. So there's a very limited quantity. Okay, Bitcoin cannot be debased. Okay. Now, if you look at $100 today, okay, that'll give you roughly $50 of purchasing power 30 years from now, assuming an average inflation rate of 2.3. Bitcoin doesn't work that way. Bitcoin is based upon Bitcoin. So as the value of dollars decline, Bitcoin goes up. Okay. Now, Bitcoin is digital. It's a great transfer of value, right? You can move it from country to country, from area to area, send, receive, without all the involvement of a central bank or any bank whatsoever. That creates anonymity, ease of transaction, low cost, lot of positives. You can't do that with fiat. You can't do that with gold. Okay. Um, it's been pretty volatile, but as it becomes more and more mature of an asset category, it's becoming less volatile. If anyone follows Bitcoin, you're probably noticing that it's not as volatile as it used to be, and it has outperformed the Magnificent Seven, the S&P 500, and gold and real estate 11 out of the last 14 years. Okay, it doesn't have a huge correlation to the U.S. equity markets, stock market, It's kind of very similar to gold that way, and gold's been on quite a tear as well. Bitcoin has emerged as the new asset class. It's a scarce asset, okay? And it's gaining global adoption worldwide. Like, you look at the average person now is starting to use Bitcoin. They're aware of Bitcoin. What happens when the rest of the people in this world adopt it? What happens to demand? Demand goes up. Now, the Bank of America ranks Bitcoin alongside the printing press, steam engine, light bulb, and internet as one of the most disruptive innovations of the last 1,000 years. Now, 1,000 years is a long time ago, but we're going back quite a ways. And you can see all the different technologies that were adopted in the last 1,000 years. Not really didn't start till the printing press in roughly 1400, but you can see how quick the adoption curve for Bitcoin has been. This thing's only been around since 2009. What happens in another 10 years? Everything's going digital. There's a global monetary change fueled by digital transformation of capital markets and financial innovation. And Bitcoin is different. It's the next great technology. In our opinion, it's not comparable to crypto, any other crypto. The other cryptos, like, and they all have their advantages and stuff, but the main, I think, advantage for Bitcoin is the limited supply of it. You can't just make more of it. That's it. Now it's divisible by 100 million. Each Bitcoin has 100 million Satoshis, but you can't make more of it. That's the interesting part. Okay. Whereas other cryptos, they just make more of them. These meme coins, they're, oftentimes they're just absolute garbage, pump and dump schemes, all that stuff. Whereas I think Bitcoin is going to be a great asset category to be in and is very disruptive. Now, let's take a look at what happens if you invested in Bitcoin versus just investing in the S&P 500. Well, over the last 10 years, just the S&P 500 has averaged 13% a year. Now, it's the maximum, like long-term average is around 11%, so it's a pretty good rate of return. The maximum drawdown, just shy of 24% in 2022. And had you invested 10 years ago into the S&P 500, you'd have 238% of your money, right? Now, if we just take the S&P 95% and just add 5% Bitcoin in there, well, now all of a sudden your compounded annual growth rate, your CAGR, went to 20.6. The max drawdown is very similar at 25.6, but look at that cumulative return. It's far more than double that of just holding the S&P 500. And one of the reasons we have outperformed this year is because of Bitcoin. It's been a great asset category, right? Through IBIT. So it's low correlation with traditional assets like stocks and bonds. It may help to reduce the overall risk of the portfolio, but it's obviously a fantastic hedge against inflation. The more money central banks print, the more the value of Bitcoin should be. Now, it's also very innovative, and since it's well documented, it's got a great ecosystem. It's one of the most liquid asset categories. Matthew, you sent me that money. How long? I think it took like a minute or two to get.
It took a minute or two. It was cheaper than I think it was what, $1? Not even?
Not even.
Not even, right? It is very cheap. It was very seamless. Yeah, but like the scary part is like there's no passwords really. It's like, send me this long login and like code and like that's it, right? It's pretty, what you see is what you get.
Yeah, now that's if you hold it yourself. We're not holding it. We're holding it through a custodian, which is IBIT. So BlackRock is the ETF. So and that's held on Coinbase. So we don't hold Bitcoin personally or through a cold wallet. It goes through the proper channels because of the fund. Okay. Now, as more and more companies and institutions, governments, sovereign wealth funds, pension funds, etc., adopt this, these numbers could get substantially larger from here, but we'll see. Now, Bitcoin can be pretty volatile. I think in 2021 it was down to 17,000 USD. Now we're just shy of 108,000. Governments may impose some sort of restrictions, taxes, bans. That can impact Bitcoin's value and legality. But again, the government really has no way of knowing that anyone has this. And that's why a lot of people like it, because they don't know. You can spend, if you receive Bitcoin, you spend it, no one's going to know. Right? If your Bitcoin happens to go up in value, I'm not at all suggesting to avoid taxes or anything like that. But I think that's one of the appealing parts for some people is they don't have someone looking over them and their capital, right? Now, the security risk, while the blockchain is so far quite secure, exchanges and wallets can be hacked, leading to a potential loss of funds, i.e., you lost your keys or some sort of scam. ETFs are much less prone to these security risks. Like I said, we hold Bitcoin through a ETF called IBIT, BlackRock's ETF, and BlackRock then holds the Bitcoin on an exchange called Coinbase. Okay. Now, market manipulation. Due to limited regulation, large holders, whales as they're called, Bitcoin can be vulnerable to manipulation. Means if a lot of people are selling all of a sudden, it could drop the price. A lot of people start buying all of a sudden, it increase the price. It's much more open to that. But if you're a long-term unit holder or long-term holder of Bitcoin, in the long run, that won't be a big deal. Okay. And as more and more adoption takes place, this becomes less and less impactful. Okay. Now, here's their exposure of our portfolio right now. We're right in line with Amazon and Alphabet. A little bit over on Apple there. A little bit under on Microsoft and Tesla. AMD has done really well. It's come roaring back. We were buying AMD left, right, and center when it was down to 78, 82, $74. It was a steal, and we were buying it. Now it's at 143 today, 142. It's done really well for us, and that's the whole point. We bought very aggressively when the markets went down. So we're a little bit light on Meta, a little bit heavy on Eli Lilly. We've got good exposure to Taiwan Semiconductor. NVIDIA just became the most valuable company in the world, yet once again surpassing Microsoft at roughly 3.7 trillion, hit a 52-week high. And when stocks generally hit 52 weeks high, as many of the stocks are hitting, they tend to continue to go up. Now you can see our Bitcoin exposure here through IBIT is 6.2%. So if Bitcoin does what we think it's going to do over the next number of years, this could have a very meaningful impact on the portfolio. Okay. Now, like I said, the main thing and we're going to start including this in the next fund update call on the last Wednesday of July. But like I said, we are beating the index by roughly 2.5% for the year. That's net of all fees, net of everything. Right? Now, we have collected a lot of money from put and call writing. We've been quite aggressive on companies like Bitcoin. But the majority of the portfolio is long. You can see it's almost 90% just holding stock. Right? And we have collected, as you can see, 7.88% of AUM just from premiums received. So we have collected a lot of premiums. And like I said, the great thing is we're beating the index. And I'm really happy about that because that is a very difficult thing to do. And not many people can do it. If we can do it consistently and we believe in our strategy, which we do, we think we'll do great over the next number of years. Because remember, another thing that's happening, artificial intelligence is just beginning. You're starting to see it in every day. Matthew, I was talking to you today. You said you use artificial intelligence pretty much every day now, right?
Yeah, it's like a part-time employee now.
Yeah, right. Right. And how much will that impact life in the next, and this, we're at the beginning stages of it. How much do you think that'll impact life in the future?
Tremendously.
Tremendously.
Tremendously, yeah. I mean, I think you need to get to a point where you are using it, not it is using you.
Yes, I would agree with you. Yeah.
So it's a slippery slope, right? This thing, like, it's not your friend, it's your tool.
Yeah, it's not your friend, it's your tool. I would agree with you 100%.
Yeah.
Let me just see here. So like I said, really nice for us to be beating the index. Artificial intelligence is just starting. I'll give you an example, okay? So artificial intelligence, Tesla released their first paid robo-taxi rides this Sunday in Austin, Texas. They charged a very funny dollar sum, flat fee of $4.20 to go wherever you wish in Austin, Texas. Now, why Elon missed, he likes to have fun that way. Why he picked 420? I don't know. Maybe somebody else can guess. But $4.20 was the cost of the first robo-taxi rides. Now, they actually launched on June 12th, but those were internal employees and to make sure the system was safe, that nobody was getting hurt, etc. Elon has said by the end of next year, there'll be hundreds of thousands, if not over 1 million robo-taxis on US streets. Can you imagine how much money this company is going to make when cars are driving around, no driver, picking and dropping people off? What is your cost? There's no human cost. There's just the cost of electricity plus the wear and tear on the vehicle, and they are going to self-insure. So there's no insurance costs, direct anyways. So what is that going to mean for profitability? That's just one example of artificial intelligence. Microsoft recently laid off 3% of their staff with plans to lay off another 3% of their staff. Now, a lot of these are entry-level jobs that are now being replaced by artificial intelligence. What that means is these companies are going to make more money and they're going to have less expenses. Okay. What does that mean for future stock price? Well, we can infer there that it may have a lot of upside. So the companies that we hold in our portfolio, okay, these companies we believe are very well situated to perform exceptionally well over the next number of years. Now, the Nasdaq has averaged 18% a year for the last 15 years, excuse me, just shy of 18%. But if we're in this next phase where technology is going to become a greater and greater part of our lives, and artificial intelligence really takes off here, like the examples I gave of Tesla and Microsoft, our two biggest holdings, that could mean corporate profitability explodes, especially in the technology area. And we're seeing that with stock prices the way they are. A lot of these companies are now hitting 52-week highs, which is great to see. And of course, we have a good amount of exposure to Bitcoin. Most companies do not have any exposure to Bitcoin. So we are a bit of an outlier there, but it has helped us tremendously. Matthew, any final comments?
No, you know what? Like the idea of this portfolio is to be a growth portfolio, right? We know that, right? And obviously we see this as a tremendous source of growth right now. You know, the Bitcoin is in our opinion a growth driver along with the AI side of things. They're both very heavy tech based, but like I wouldn't say that. But they do provide a little bit of diversification from that perspective. So we do like that. But again, like this is again a growth portfolio, but growth comes in different shapes and sizes, right? And we are involved in a few of them. One is healthcare, one is AI, one is EV, one is cloud, and another is Bitcoin, right? And that's those basically the main themes that we are invested in this portfolio, and so far it's done quite well. So we're quite happy to that. And yeah, like let's see how these themes play out. These are not themes that are going to play out though in 2 months or 3 months, right? These are themes that are going to play out over multiple years, and there are going to be ups and downs. We've definitely experienced those in the past, and we are, you know, we probably will experience them in the future too. Just don't know when, right? But you know, this portfolio is for those that believe in those themes, and we believe that we're quite well positioned to see these to be fruitful once the time arrives when, you know, all when these things are really and truly part of our everyday lives. So
yeah, and then the next one after that is going to be, you know, robotics and artificial intelligence. That could change the whole world entirely. We don't know, but like Matthew said, that's probably some time away. But there is a very interesting thing that's happening here. So let's just look at seasonality here. June's not considered a great month in the summertime, but the last few days of June begins that summer sizzler trade, whereas July and August tend to be the best 2 months of the summer. And then we go into fall, which tends to be, you know, not so good, especially September and October. They're not so good. So we're going into that area. We are anticipating some rate cuts in Canada and the United States. The Bank of Canada is more than likely going to cut rates when they meet in July. And we're anticipating 2, maybe 3 more rate cuts in the United States to help stimulate the economy because the economy is not doing well. But the stock market is doing well. Why? Because the market understands, the street understands that these companies are getting more and more profitable with less and less cost. Okay. You want to contact myself, Matthew, or David Jarvis, here's our contact information. Please feel free to reach out to us whenever you feel like it. And thank you so much for joining us. If you have any questions,